Hello and welcome. I'm Shireen Bhan and you're watching Young Turks, India's longest running show on startups and entrepreneurship. It has been a momentous year for General Atlantic, which is celebrating 2 decades of investing in India. Well, we know what that feels like as Young Turks also completed 20 years of chronicling India's startup story this year. General Atlantic has been a big believer in the digital disruption story since the early 2000s. The growth equity investor has deployed more than $4 billion in Indian enterprises across key sectors like climate, consumer internet, financial services, healthcare and technology. In the next decade, GA wants to double down on India, which is its top target market. $2 billion have been set aside for investments in Indian and Southeast Asian innovative businesses over the next 2 years. In fact, its recent $100 million bet on Amagi turned the SaaS media tech startup into a unicorn. This alone can tell us about the size and type of investments that could come in from General Atlantic. Having said that, growth stag rounds like these have been hard to come by this year. India saw a record $77 billion of private equity and venture capital investments in 2021, but 2022 has been sobering to say the least. Globally, investors have switched to the wait-and-watch mode, weighed down by tech routes, fewer exits, inflation woes, recession concerns, higher cost of capital, and geopolitical uncertainty. Against this backdrop, what's the playbook at GA and what's driving its decision to go big on India as we turn the page to 2023? To answer those questions, joining me on the show, Sandeep Naik, Managing Director and Head of India and Southeast Asia at General Atlantic, and Shantanu Rastogi, Managing Director and Head of India at GA. Gentlemen, thanks very much for joining me here on this very special episode of Young Turks. And let me start by saying congratulations. 20 years, 2 decades, it's an impressive milestone, Sandeep. Let me ask you for what the biggest hits have been along this journey.
Shireen, thanks for having us and congratulations to you on 20 years of Young Turks. It's been a phenomenal program. It's been one that has truly motivated entrepreneurs in India, and a lot of the credit should go to you for really making it happen. So congratulations to you as well. As we think about the last 2 decades, we feel very fortunate to have been a part of the story of building some of the most iconic companies in India. It started off with our first deal in 2002. When we invested behind Patni Computers. And that was the beginning of real investments going into IT services in the country, which was followed by Genpact. We then did Jubilant, we did Hexaware, we did IBS, Cyient, and we did a bunch of deals which were basically anchored around the theme of outsourcing in India and how you can benefit from the labor arbitrage that India had to provide. So in that first decade of investments, we did a lot of deals focused on BPO and IT outsourcing, while also doing deals in the financial sector, like our bet on NSE. We did IndusInd Bank around that time as well. And that was really the flavor of what we did in the first year. So we invested about $1 billion in 10 deals in the first decade of investing in India. In the second decade, we really expanded our aperture given the domestic consumption story in India and the fact that there was a lot happening on the ground in India where we could build companies that could benefit India. And in the second decade, we deployed over $3 billion in companies within financial services sectors like IFL Wealth, BillDesk, KFinTech, PNB Housing, recent investment in ACO. In healthcare, if you think about companies like KIMS Hospitals, ASG Eye Care, Rubicon. In consumer, with companies like Anita Dongre, DMart, Capital Foods, as well as Reliance Retail. And then in consumer tech, which includes Jio, Baiju, Unacademy, as well as No Broker. And so we really expanded the domestic consumption story and backed companies where we tripled the investment in the second decade. And that same pace should continue, Shireen, in our third decade, as GA looks at backing great entrepreneurs, building companies for the next India.
Well, thanks very much for recapping to us some of the milestones achieved over the last 2 decades. And it's interesting to see how the complexion of the companies invested in has changed between the first decade to the second decade, much more the listed play in the first decade versus the unlisted play or a mix of both in the second decade. So Shantanu, that's what I want to discuss with you. What does Decade 3 hold now as far as GA's appetite to bet on India? And in terms of diversification and in terms of looking at themes that you haven't touched on so far. Is there anything on the anvil that's new? Where do you expect to double down further at this point in time?
Sure, Shireen. Thanks for having us. And I think decade 3 is going to be very exciting. India being one of the only major economies in the world, which has the potential to grow at 7 to 8% for the next decade. Young population, English speaking, one of the best, one of the countries producing over more than a couple of million tech software developers, which are coding for the whole world. So the outlook is fantastic for India. What we really want to do is use our enterprise IT services theme and build on it to back entrepreneurs who are now building software products for the world. So software out of India is a huge theme for us going forward. We want to double down on healthcare. KIMS and recently ASG Eye Care, Rubicon have been fantastic investments for us. And this is a big theme where we believe shift to private healthcare, affordable healthcare is a multi-decadal theme, and we'll continue to do more in that area. And lastly, I would say the underlying theme is really digitization. With Geo coming in, low-cost data, close to 500 million young Indians having low-cost internet access would create fantastic omni as well as direct e-commerce marketplace opportunities that we are very excited about.
Healthcare and, of course, the SaaS story, which we've seen you bet on through companies like Amagi, and, of course, the larger digitization trend that you spoke of, Shantanu. But, Sandeep, I want to come back to you now and just to build this out a little bit further. Through the course of the pandemic, the India SaaS story was what everybody was talking about. Companies making in India but for the world seems to have become the theme that investors want to bet big on. What do you see as the key challenges there, especially in the current context where we are seeing both in terms of valuations but also in terms of market dynamics changing? Do you believe that that story may see some challenges in the near term, while in the long term we agree that it is poised for future growth? And on the whole digitization aspect again, through the pandemic, the bets that were made is that this is the new normal. There's never going to be a revert back to what we saw pre-pandemic. But that assumption hasn't necessarily played through as expected. So on both counts, what are you factoring in? What caveats are you factoring in?
I'll split the question, Shireen, because there are two different answers. One is on enterprise SaaS, what's going on, and then on the consumption story, consumer tech in India. On enterprise SaaS, we believe this is a decade-long opportunity, similar to what we saw in the early 2000s when we embarked on the IT outsourcing story. Indian IT outsourcing companies created almost $1 trillion of market cap in the last 2 decades. We believe that enterprise SaaS coming out of India will create another $1 trillion of market cap in the coming decade. So they will do it within half the time that it took us backing IT services companies in the last 2 decades. So that's a real trend because 24% of the software engineers globally are sitting in India. India graduates about 3 to 4 million engineers every year. And so truly to provide the enterprise SaaS offering to the rest of the world, these companies will have to get created here in India. In terms of the valuation environment, yes, the valuation environment has completely changed. And that will also change for the enterprise SaaS companies. And hence, there'll be some great companies that are going after very large addressable markets that will be investable at what seems like very fair valuation. And we are seeing a string of those companies that we are currently in discussions with that we will go ahead and make a play. If inflation continues to be high and if the global economy continues to suffer for the next 18 to 24 months, there will be some slowdown in terms of enterprise SaaS offerings that will get absorbed by these companies. So the sales life cycle might be a little longer and you might see some of the revenues slowing down, but the next decade-long story is very much intact. And as GA, you'll see us betting on a lot of enterprise SaaS companies, Indian founders, Indian companies, building out and serving the rest of the world. In terms of the consumption story in India and consumer tech in India, I think we did see an acceleration in terms of adoption during COVID. And once people have now moved out of their houses, you'll see a little bit of that come off. But the awareness and the adoption is real. The stickiness is definitely there. And as a result, this has opened up a whole slew of opportunities whether it be in fintech, whether it be in health tech, whether it be in edtech, where people have gotten used to using technology to make their products and services that are available to them. And as a result of that, the entrepreneurs that are building companies on top of the India stack that's been created, these will be decacons that will get created in this decade. And as General Atlantic, we hope to be a part of many of those stories.
Well, we look forward to many decacons being born here in India, Sandeep. We look forward to that. But Shantanu, you were talking about the bets that you want to make in the third decade: healthcare, enterprise SaaS, digitization. And I want to address the EdTech story, because you've been believers in the EdTech story. You've invested in companies like Byju's, etc. What we're seeing through this phase at this point in time is not just a big correction in terms of valuation, but we're also seeing these companies having to pivot their business models. There are questions on monetization ability and monetization capability, and whether this model is eventually going to work in the long term. Has the EdTech space seen a reality check? Is it going through a reality check at this point in time? What do you believe is likely to change within this?
That's a great point to discuss, Shireen. When a cost of capital increases and liquidity dries up, a lot of sectors have to undergo a reality check. And I think EdTech is no different. When there is plenty of capital available, a lot of business models may have to optimize themselves for a slightly different capital environment. So I believe the real signal remains very strong for the next 2 decades to create millions of great global workers out of India. And a lot of the companies we have backed thus far, and many more that we intend backing in the years to come, would continue to provide great value proposition to these learners who want to start, coding, as well as providing services and building products for the rest of the world. So we remain very, very positive on the long-term outlook for this sector, and continue to want to double down in this sector in the years to come.